Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I am Kavita Thapalial and we have lined up a power-packed show, and here's what you should expect today on the show. First up, we will discuss SEBI's move to direct AMCs to constitute a unit holder protection committee, and to explain what is going to be like, we'll be joined by Nirav Karkera, Head of Research at Fisdom. Next, we will discuss life and health insurance policies for same-sex couple and LGBTQ plus community. For this, we'll be joined by Anuj Parekh, co-founder and CEO, HealthySure, and Sajja Praveen Chaudhary, Head Policy Bazaar for Business. Next, we will also be talking about a lot on your credit cards and your savings. We'll be joined by Aparna Ramchandra, founder, RectifyCredit.com, Ritesh Srivastava, founder and CEO, Free. And finally, on our last leg, we'll throw upon the counter to get your mutual fund portfolio queries answered by Shweta Jain Investography. So do send us your queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So that's a lineup for the day. But then let's get you the top headlines of the hour. Nifty creates yet another record high, close advances for 6 straight sessions, 32 out of 50 Nifty constituent advances. Shares of Bajaj Finance Limited soar on solid Q1. The NBFC sees 30% jump in AUM. Avenue Supermart's Q1 numbers largely in line. The much anticipated IDFC Bank merger has been approved by the board. MD and CEO of the bank, V. Vaidyanathan, says the aim is to create a FinServ powerhouse. Adds that the merger has removed the overhang of 40% on shareholders. TweetDeck will soon be available only to verified users, says Twitter. The change will come into play in 30 days. Right. So recently, capital market regulator SEBI directed AMCs to constitute a unit holder protection committee, or UHPC. Now, this committee will have an independent review mechanism that will look at decisions of AMCs from unit holders' interest. Let's understand this, and for that, let's welcome on board Nirav Karkera, Head of Research at Fisdom, and let's understand the SEBI's moves that will impact investors as to how will they benefit, more importantly. Nirav, good evening and welcome to the show. So clearly, once again, and one more step coming up from the regulator, which is for the benefit and protection of investors. But then, how exactly is this committee going to be like, and what exactly will be reviewed? I mean, unit holder protection committee clearly sounds like a committee that will take care of the unit holders' interest. But then what exactly are we talking about?
Absolutely. So, Kavita, like you rightly pointed out, the Unit Holder Protection Committee is literally going to focus on what it sounds like. It is going to focus on the protection of unit holder rights. So, SEBI has this long drawn agenda on investor protection, and it has been progressing on this agenda really well. We have noticed a flurry of regulations in line with the same larger theme of protecting investor interests. And this time around, this is focused on unit holders of mutual funds. So very specifically, this committee is going to be formed within AMCs. It is now mandatory to form such a committees that is specifically focused on unit holder protection. Obviously, almost every AMC already has an internal team that is focusing on protecting the interest of unit holders. However, there is clearly a need for unit holders to also be represented by an independent representative and a body that is dedicated towards thinking from its perspective and voicing their opinions and their concerns on the inside as well. And this has a lot to do with decisions across the AMC as a corporate, across product and service levels. So, this committee is going to focus on a lot many things. To name a few, it will focus on the efficacy of implementation of several investor protection and awareness campaigns that several AMCs launch It will also focus on a lot many decisions that are made during fund management, not very specific to investments, but at a broader fund management level, whether it moves in the interest of unit holders or not. And this is very specifically important during times of, during anomalies, wherein something goes off track, or there is a special situation wherein AMC needs to exercise its discretion and make certain amendments. That's when this committee will be observing and overseeing that the entire process is aligned in favor with unit holder interest more than anything else.
So far, I mean, what happened, due to which the thought of forming this committee even crossed the regulator's mind? Because so far, whatever announcements or whatever steps the AMCs have to take, which impacts the unit holder, is very transparent, and that has to be informed to the regulator. And in fact, nothing goes beyond their say. So, what exactly made the regulator decide about such a committee?
So I would say it is not just an isolated event that led to this. It is probably a series of observations. If you notice, over the past couple of years, there have been several instances wherein a decision related to an investor awareness program, or let's say a particular fund segregating, or let's say a close-ended fund rolling over, or in case of a shutdown of a fund, how are the proceeds going to be recovered and redistributed. There are a variety of such events that keep happening within the industry. Now, most such events also create a lot of division amongst investors and AMCs also. So quite often than not, it happens so that many investors are not really happy with the way asset management companies are making such decisions, and it is not always possible for the regulator to step in. It is also important that there is a more direct and a more closer committee that is looking at all of these happening and ensuring that the decisions taken are in interest of the larger public, or in this case the unit holder group. So it is a series of such events wherein investors have not been very happy with the way AMCs went about deciding. Obviously, the jury's still out on whether the decisions taken in certain instances were actually good in public interest or not. But the general unit holders, there was a general sense of resentment that their voice wasn't really heard as well as it should have been, and that they could have been represented better, and that their interests could have been taken care of in a better manner. So having such a committee actually addresses most such issues in the foreseeable future. Obviously, things at a larger scale will be directly escalated to the regulator. The regulator will step in, but this ensures that the issues that can be handled more amicably, and the issues where the gap is only of representation, such issues are handled in a much more streamlined manner, in a much more in a much more friendly, amicable manner between the AMC and the unit holders. So this makes the operational layer of this entire regulation much more simpler, ensuring that investor interests are protected more directly. So yeah, a series of events have possibly culminated into such a regulation.
Right. So Nirav, I know this is still in the planning phase, and AMCs are yet to come up with their own thoughts on this particular committee. But then, who exactly can be a part of this committee? Will there be specific AMC people who might be given this responsibility, or you think that SEBI might just come up with independent people who might just oversee all of this?
Yeah, so initially, obviously, the proposal was to have more than two-thirds representation by independent directors. However, through consultation, the regulator seems to have come to a point wherein there is a lot more freedom assigned towards the AMC board towards constructing the form and overall format of such a committee. However, the regulator seems very clear with the fact that such a regulation will make sense only if there is a adequate and more than adequate representation by independent entities, in this case, independent directors. So one could expect a committee to be formed by relevant internal AMC employees, the most relevant people to the subject. At the same time, it can be expected to have adequate representation by independent directors who have limited to no vested interest in the AMC operations whatsoever.
All right. Now, clearly, also we know that this committee has still been proposed. But then, so far, do you know or are you aware of any kind of guidelines or any kind of format that AMCs are following, which could be similar to what this committee is, being set up for?
So AMCs internally have a customer grievance redressal system, and it has an internal team that that is completely tasked with the assignment to handle customer grievances and ensure that the grievances are redressed in the most effective and efficient manner. This forms a part of their internal grievance redressal mechanism, and a little bit of overlap with the internal compliance structure. There is a slight bit of overlap there, but it is not while some AMCs may have a very dedicated committee or a dedicated department that tries to amicably resolve any differences between AMC and unit holder points of view, but there is no very fixed sort of a structure or a committee of this sort that has been mandated or is at least uniform across the asset management industry. So, while AMCs have smaller departments, and there are compliance and grievance redressal officers and mechanisms all nominated, assigned, and tightly in place, this one is very distinct in its approach and is going to be tasked only, unlike most other things that we spoke about, this one is going to be tasked with only the objective of thinking and voicing opinions on behalf of unit holders.
All right, so this is all about the Unit Holder Protection Committee that SEBI has proposed to be formed by all the AMCs. Thank you so much, Nirav, for being on the show and helping helping our viewers understand every aspect of this particular news. Thank you. All right, so we'll take a quick break, and post that, let's talk about insurance policies for LGBTQ plus and same-sex marriages. What is the plan ahead in terms of life insurance and health insurance? All of this after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. The Supreme Court of India decriminalized homosexuality in a landmark judgment in 2018, yet many insurance benefits have not been available to the community. While the past couple of years have seen many workplaces offering inclusive policies, the journey towards equal and inclusive policies remains elusive. So, on The Money Show today, we have on board Anuj Parekh, co-founder, CEO, Healthy Shore, and Sajja Praveen Chaudhary, Head Policy Bazaar for Business, to discuss more on this. Sajja, good evening and welcome to the show. So today we are going to focus on life and health insurance benefits for LGBTQ plus, same-sex marriages and live-in relationships. Although we know homosexuality has been decriminalized, but then a lot of work needs to be done for same-sex marriages. And although live-in relationship have got the thumbs up from the Supreme Court, yet there are still things which are not as simple and easy as it is for the rest of the crowd. So let's talk about the availability of life insurance for same-sex marriages, LGBT plus community and live-in relationship. What's the structure like? What has changed? A lot needs to be, though, but then so far, what is a step that's been taken already from the industry side?
So basically, as you have said in the earlier discussion as well, the only thing that has changed is the recognition of it, right? The life remains the same, the members remain the same, the beings remain the same. So from an insurance company's perspective, the risk is at this point of time is almost the same. The only thing that was required to change is that earlier, whenever you were nominating same-sex kind of a partner or a spouse or anything, the systems would not allow, or if there's no third gender that's mentioned and so on and so forth, right? It's majorly a systemic changes. That's it, basis, which has changed kind of. And that's predominantly from life insurance perspective when you speak about, because there's nothing beyond that from a risk perspective that that's different, or from a pricing perspective that's still done. Once again, the reason behind it is in life insurance today, there's a pricing that's done basis gender, one of the important factors, whether it's male or female. Now there's third gender, which you say as a transgender. Now, there's not enough data available to kind of, price it around it. But then, today it's generally taken as a generic kind of thing. The majority changes is only about systemic changes, as I mentioned. The rest remains the same at this point of time.
All right, and this is life insurance you're talking about specifically,
Yes.
that too at a corporate level.
No, on
Which
a regular
makes
life insurance kind of thing. On a corporate level, I think, primarily this is spoken of from a health insurance perspective.
Yeah, exactly. That is what I was coming down to, because I think health insurance is slightly a tricky space and a lot of gray area over there as to what can be covered and what not. But then I think getting yourself covered through a floater policy is still doable now.
Absolutely. So in a corporate level, right, on the regular employer-employee policy, all the employees get covered as usual. Now, as part of that, what started happening is the specific cover, which is called by the name of LGBTQ cover, which has got started to get added to that policy kind of thing. Now, what does this cover? The basic thing is, as I said, the premise is the person is the same. There is no change in the person, or there's no change in risk at this point of time that the insurance companies see. So it's predominantly about accepting when you have a life insurance policy for employee who's stating that his spouse is also of the same sex, allowing that to be covered instead of rejecting it, and similarly covering them as usual as a regular for regular hospitalization is there in the policy, right? That's the only thing that changes, allowing same-sex partner kind of thing. Now, apart from this, there are certain things which the community specifically undergoes in terms of hospitalization or certain treatment, which is basically, say, a general reassignment surgery or certain stuff related to it, which is a series of consultation plus hospitalization plus surgery kind of thing. Now, these surgeries are generally not covered in regular policy, and these require a certain add-on coverage kind of thing, because the corporate policies are generally a tailor-made policies where any kind of covers can be tailor-made from corporate to corporate kind of thing. These are taken very less in number at this stage, but these are something which are available and can be tailor-made at any point of time and can be taken by corporates as an add-on. So basic cover remains as usual. The add-on cover, if they want to, in terms of covering extra hospitalization, which is specific to this category, it's up to the corporates which can take when under the tailor-made policy.
All right. Now, I also want to understand the underwriting part, which I think is not needed when you take a life insurance for these specific communities. Sajja, how would you explain that?
That's not how it is. The underwriting is going to happen as usual for anyone, right? It's not going to be that. Okay. But then at this point of time, what we're saying is there is no separate risk that is being seen, and hence there is nothing different that's happening as such from a perspective of underwriting or any other risk.
All right. And when we talk about health insurance, we discussed about the corporate level, which is more about a group policy. But then is it possible at an individual level also that if you declare that you are a part of a specific community, you can be denied, or maybe any kind of waiting period or any stringent rules that one might have to face, or that option is still not available at all?
I don't think at this point of time anything of that sort is there. It's just that you can take a policy, regular policy as usual, which covers your hospitalization of minimum 24 hours. And as I said, right, that's covered. The only thing is the specific surgeries which we're referring to here in this case, those are general part of the general waiting, general exclusions kind of a list. That's the only thing. And that's something which is, it's not an occurrence by accident, which generally hospitalization would happen, right? Or something over a period of time that the health deteriorates. It's something as a choice by choice. Someone is wanting to get hospitalized and get a surgery done. So those are part of regular exclusions. Otherwise, the regular health insurance policies are as usual available for the individuals to take, and they can very well opt for them without any challenge.
Specifically, even in the same-sex marriages, Sajja?
Absolutely. Yeah, absolutely.
Okay.
See, the only thing is that, right? There's a bit of difference here that you'll have to look at it. Today, what happens is there are a lot of people in this category. When you say same-sex marriage, you speak of it as same-sex marriage, but there are not a lot of legislations that happen in that way. Now, which means, it is not that a lot of people are actually officially married kind of thing. It's an unofficial kind of live-in partner kind of a status and so on and so forth. And generally, these kind of coverages are, more there in the corporate side, where as an additional, coverage that is added as a LGBTQ cover or a same-sex partner kind of thing or a live-in partner kind of thing. These kind of coverages are allowed kind of a thing, right? Otherwise, in regular thing, you would need to add them as a spouse itself, and there is no other option otherwise generally available.
Sajja, what about same-sex community people buying a joint life insurance, or that option is not available for them? Is that possible?
I think more clarity is awaited there, as I see at this point. Not much that we could discuss at this stage.
Sure. All right. I think we also have Mr. Anuj Parekh with us. Thank you so much, Anuj, for joining the show. And we are discussing about specific communities and their health and life insurance coverage. So the question to you now is, what kind of documents you think the LGBTQ plus and people who've had same-sex marriages or even the other specific communities we're talking about have to really submit when they are opting for a life insurance or a health insurance coverage?
Yeah. So fundamentally, that we see the space that we operate in, which is group insurance, which tends to create inclusive benefits for employees. We see that insurers are very much okay with a declaration coming from the employee saying that he or she is the partner that he or she wants to cover under the policy, whether it's as an LGBTQ partner or a live-in partner. The process is extremely seamless. There's no further documentation needed. It is just that at the time of inception of the policy, the members who are already on payroll need to declare their family members, live-in partners, or LGBTQ partners, as the case may be, without any further need of documentation. And only for new joinees, the window would be open that as and when they join the organization, they can declare such members. But existing members in middle of the year cannot declare their live-in partners or LGBTQ partners, just to prevent any scope of abuse.
All right. Sajja, anything else that you want to add on the same question?
About when we are referring to, kind of, is there anything different that these people are
Right,
treated or in
exactly.
terms of coverage and underwriting, which you said, right? See, what happens today is the uptake of these covers in the corporate side also, whether you call it LGBTQ cover or, the same-sex partner cover and so on and so forth, these are limited in nature. And there's a community which is coming out just now, openly kind of, in terms of the public and so on and so forth, or in terms of declaration. So the insurers, in terms of if they need to give a particular add-on, like the way we said, general reassignment surgery and so on and so forth, these add-ons generally come at a very heavy cost kind of a thing, right? Because there's no enough data around this to look at what are the kind of costs that have happened in the past, or to, in fact, to figure out what is the kind of future risk that would happen with, or future risk that would come up, or any complication that would come up post this kind of a thing. So once more and more, I think people, or there's more and more data with more group people signing up and so on and so forth. Probably some of this part also will get much smoothened out in terms of pricing and all of that stuff, which otherwise is going in a very, very standard way, which might not be similar to the way the pricing is done on any other add-ons, which are generic in nature.
All right, so that will be all. Thank you so much, Sajja and Ansh, for being on the show and helping our viewers understand every aspect of specific communities and their health and life insurance needs. Thank you so much. On that note, we take a quick break, but then post that, let's discuss about RBI's recent monetary penalties on 4 credit bureau companies and how does it impact and what does it mean to a normal viewer like you and me and someone who depends a lot on the credit score, and what happens to your credit score when these 4 credit bureaus have actually been fined by the RBI, and what are the kind of inaccuracies we are talking about over here. All of this and more after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and we move on to a very important topic. The Reserve Bank of India recently imposed monetary policy on 4 credit bureau for non-compliance after central bank discovered inaccuracies and incompleteness in the credit information maintained by these credit bureaus during a statutory inspection. What do these penalties actually mean, and who will be impacted by these credit bureaus? How will they be impacted? Let's answer all of these questions. I have Aparna Ramchandra, founder, director, rectifycredit.com. Ritesh Srivastava, founder and CEO of Freed. Aparna, good evening and welcome to the show. The 4 credit bureau agencies we're talking about are TransUnion CIBIL, Equifax Credit Information Service, Experian Credit Information, and CRIF High Mark Credit Information. And all of these 4 have been fined, from 24 lakhs to 26 lakhs. Now, what incompleteness and inaccuracies in their data are we talking about? Aparna.
Good evening, Kavita. This is an excellent move as far as I am concerned from both perspectives. According to the SICRA Act of 2004, is where all these credit bureaus came into existence. It is mandatory for every lender to update their data with the bureau once in 30 days, right? But this is like a voluntary thing. There is no talk about any penalty there, or no actionables if some XYZ borrower doesn't update his or her data. Initially, I can understand that lot of lenders had problem because their data was an issue. But now we see that there are some banks which have not updated data for almost 8 months, 9 months. So this is number one. Number two, at the same time, RBI has only
Aparna, one
penalized the
clarification
credit
and one thing
bureaus.
I want to understand from you is the kind of data you're talking about. What kind of data are you talking about? The data that these bureaus get from the bank, or the kind of data that, in terms of complaints, for example, if someone
No,
had
no,
put
no,
a
no, no.
complaint with
This
the
is
credit bureau? Yeah,
only the data that the banks, the lenders submit to the bureau. So basically, okay,
bureaus.
let me
Okay.
get into a little
Okay.
more detailing. So basically,
Exactly.
what
Yeah. Yeah.
happens is every lender has to submit his or her data, their data, once in 30 days, as far as every borrower, whether they have paid on time or not, whether there has been a delay, whether there has been a default. So this data needs to get updated every 30 days. So it is this data which the credit bureau gets from the banks, is processed in with their algos, and then is where our credit report gets generated, wherein we all know about the credit score, and good credit score, bad credit score, and all of that. So which means if the data doesn't get updated for a year almost, then what happens is two things: whether somebody has been paying on time, that doesn't reflect; if somebody has defaulted, that doesn't get reflected; if somebody has managed to rectify their whole credit profile, that also doesn't get reflected. So we are basically seeing stale data, and that has no meaning to anybody else anybody in the ecosystem.
All right. So, Ritesh, now coming to you, this lack of compliance that's been found out by RBI is actually not a new thing. But then I'm glad that this step has been taken, as also mentioned by Aparna. But tell us something. What kind of an image or reputation now this has in front of the users or the investors, or people who are really worried about their credit information, their credit rating? Can we really trust these bureaus anymore?
Well, thank you for having me on the show, Kavita. Yeah, I mean, unfortunately, the users don't have any option but to trust the bureaus because they've been entrusted by the RBI to maintain financial information, financial payment history, for the users across, their loan profiles, anywhere they're applying for loans, their credit history, the payment history, everything. Uh, I think also not to be overly critical of the bureaus because this fine has been as a result of a statutory audit that was done in 21 March, right? Which obviously was immediately after the moratorium was announced and the period of 6 months, where there was a restructure that was offered. So a lot of lenders were playing catch up, on with the bureaus in terms of updating the information, updating the payment history. So I think as the system evolves and as the credit bureaus evolve as well, I think we will see that there'll be far more regular updates that will be happening for the borrower's payment history, the entire credit profile. So I'm just taking a neutral stance here, Kavita, given the fact that this is for March 21, which was immediately after, we all know the moratorium and those things that happened.
Let's understand this from the viewer's point of view, Aparna. Now, if I want to dispute errors in my credit report, how do I do it? And also, the kind of inaccuracies that RBI has found out and have been these been asked to be rectified by the credit bureaus also. How will me as a user would know that I'm a part of this inaccuracy, and then how can I further go ahead and register a dispute?
Before I answer this question of yours, Kavita, let me also clarify. This is, also around the time where major issue happened because of these large PSU bank mergers that happened around the same time. So multiple banks, huge banks, data was, all over the place, which is where there was a delay, and the statutory audit happened in March of 2021, as I mentioned just now, and that is where this whole thing has happened. Today, to answer your question, it is not that all is bad or all is lost. If you and I today write to either of the four credit bureaus saying that XYZ data is not updated, the chances of you getting a response in less than a week is almost 100%. So, and then they in turn talk to the lenders and get your data updated. And these days, another good thing that all the four credit bureaus are doing is, each time you raise a dispute or there is an updation that is there, they are emailing you a soft copy of your own latest credit report free of cost. So this is a huge positive. So only thing I would suggest to all the viewers, like you and I, is which is why I keep telling that to check your credit report once in a year, if not twice in a year. If you know that you've been borrowing, or you've closed a particular loan, or you've disputed a particular loan, or there was some issue with your data, identity theft, or whatever that has happened. So it is good that when you check your report once in a year, you already know what is going on, rather than look for water when there is fire. So don't go check your credit report only when you are choosing to apply for a loan, or you've gotten rejected by a lender because there is an issue with your credit profile. So if you are hygienically doing this as part of your own personal compliance, then I don't see this as an issue. And like I said, if you raise a dispute, the response, the turnaround time is now less than 7 days. Kavita.
All right, so now this thing I wanted to understand, it is very important for the viewers to know that the credit rating improves once you maintain a proper process and you maintain hygiene in terms of your payments and put efforts in improving your credit score. Ritesh, how can we ensure and how can we actually cross-check that the impact will be seen on our credit reports also?
So, Kavita, there are 4 credit bureaus currently, right? And RBI mandates that every individual is entitled to 1 free credit report a year, right? So and this is for your viewers, they can actually time their, credit report, which they get free access to, right? From all these bureaus every quarter, every 3 months, right? Get a check of, and especially watch out for, the status of your current loans as well as your closed loans. Look for the balances, right, that you have. Look for the payment history. Also look for the credit checks or the inquiries that have happened. I mean, we already are reading about a lot of identity frauds, right, where your PAN and Aadhaar gets leaked, and there are people who are pulling credit or or borrowing on your behalf, right, as identity fraud. So I think important thing which many borrowers may not do or may not be doing is to also look for the credit inquiries that are that are reported on your credit report, and once you check that, you will know if whether are you a victim of identity fraud. So if you come across any credit inquiry which you have not perhaps applied for, that is a red flag right there, which you can write immediately raise a dispute to the respective bureau, and they are mandated to respond to you in a time. And like I completely agree with your previous panelists that you have 7 days. Within 7 days, we have seen many of our customers getting a response from the bureaus directly. So they are catching up. Like I said, it was the March 21 issue was largely because of many other functions, many other factors, consolidation of banks, mergers, moratorium. But I think we have seen the bureaus kind of, upping their ante.
All right, I think that will be all. Thank you so much, Aparna, Ritesh, for being on the show and helping our viewers understand every aspect of these news. Thank you.
Thank you.
All right, we move on, and there are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria one should look at to help you navigate through this maze? We have on board Shweta Jain Investography also. Do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. Shweta, good evening and welcome to the show. And let's get you connected with our first viewer, Chaitra. Hi, Chaitra, how are you doing?
evening, ma'am.
Hi, good evening.
Ma'am, currently we are investing in 4 funds.
Mm-hmm.
Just I wanted to know, I wanted to know you review our portfolio, ma'am. One is SBI small cap, second one is SBI
Sure.
mid cap opportunity, third one is Mera Asset Emerging Blue Chicken, and fourth one we started just 3 months ago. It is Mera Asset Flexi Cap, ma'am.
All right.
Just I wanted to review the portfolio,
what's
ma'am.
the-
You are looking for a long-term horizon, from 10 to 15 years, ma'am.
All right, 10 to 15 years. All right. What's the corpus
How
that
it
you want
is
to
our
accumulate?
portfolio.
Got it.
We don't know how much we will getting, but just I want to review our portfolio, ma'am. Right to you have to change anything, or shall we do the continue,
Sure.
ma'am?
All right. Shweta.
Hi, Kavita. Thanks for having me on the show. So I would recommend a couple of changes. The portfolio does look good, so I have to commend him on that. But I would recommend a couple of changes. It's skewed towards small and mid cap, and it has 2 mid-day schemes as well, which would have an overlap, which do have an overlap. So I would recommend that he adds a passive fund like a UTI Nifty 50 as the core part of the portfolio. So maybe instead of a mid-day flexi cap, he could do this. Also, the HDFC mid cap is a huge fund, so I would definitely recommend that if he isn't attached, or if he wants to change that, that is something that he can change. 3 schemes are good enough for him. Like I said, the core has to be the UTI Nifty 50, and the other 2 can be small and mid cap. While in a market like this, small and mid cap do look more attractive. But in a normal scenario, when markets are up and down, it does make sense to have large cap as your core and mid and small cap to be sort of a satellite, and the portfolio volatility will be lesser.
All right. Is there anything else you want to ask? Any other question? All right, I don't think so. We have him on the phone line anymore, but then hope that he's noted down your recommendations. We move on and we'll take Nitin's question. Is Nitin there with me on the phone line? Okay, this question is by email, and Shweta, he says that he's been investing in BNP Paribas large cap, Axis large cap, mid emerging blue chip. He also has Axis Growth Opportunity, Invesco Contra, and SBI Small Cap. I don't have him on the phone line, but this is what he's been investing every month. How are the funds?
So he has a lot of large cap funds. And as we've seen and discussed various times over the last few months as well, and this has been an ongoing debate. So large cap to beat Nifty 50 or even Sensex for that matter, it will be difficult for the funds, and it has seen. So especially his Axis large cap, I can see huge underperformance. Even BNP Paribas large cap, all of his funds actually are quite underperforming when you compare them to their benchmarks, and also when we compare them to the category average. So other than SBI small cap, he may need to do a huge revamp here. So he's investing, I think the SBI small cap, he said 25,000. I think it looks like 2,500 because of the other scheme allocation. I would assume that. So I would say otherwise the small cap exposure is huge, because if it is 25,000 and other schemes are 2,500 and 4,000 approximately, then the small cap exposure is huge. So he has to relook at that. If he had him on phone, I would definitely have asked him that as a question. I would also recommend that he starts adding a UTI Nifty 50, so a passive fund instead of all the large cap funds. He doesn't need to diversify into so many large cap funds. One flexi cap fund like a PPFAS flexi cap would really help him diversify into the segments that he wants to, and also add that bit of international exposure. So I think that would be quite nice. And he has to look at why he needs a contra fund in the portfolio. Is that something that as a strategy he likes? Or does he want that cushion? Or does he like a part of that being in absolutely different stocks? So that's something that I would like him to understand, because contra funds may not perform at the same time when your other funds perform, and he might compare them. So it would be like comparing apples to oranges. So I would not want him to do that. So I would want to understand a couple of these things, but I do think his portfolio needs a revamp now.
All right, so that's the solution. And thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries. But then